Happy, happy Thursday. You know, Biden could go F himself because he's going to make the economy tank like it's never tanked before. We had the shutdowns that lasted about 2-ish years, keeping people out of work, followed up by inflation. Some of that inflation is caused by preventing people from going to work for getting a certain procedure done. Other part of the inflation was due to war on gas or petrol. Stock market's been kind of tankering down. Confidence in the market is down. There's only one surviving market out there that is an indicator of things that are going to get worse or get better, and that is the housing market. Under this a new rule from Biden that goes into effect in a couple of days, May 1st. New mortgage rate structured subsidize high-risk home buyers. So if you got a 740 score or higher on a FICO credit score with 15% down to 20% down payment, you'll get a surcharge of 1%. And people that have a under a 679 credit score or lower with 5% down will get a 1.75% fee discount. So you worked hard. You paid off all your credit cards. You worked hard throughout your whole life, however long that is. And your reward is that you get to pay a 1% surcharge while others that are not responsible, let's put it that way, get a fee discount of 1.75%, which is going to be paid by your 1% surcharge. Now, this is just a screen grab, of course. But let's hear what Fox News have to say. Biden rule will redistribute high-risk loan costs to homeowners with good credit. Interest rates for mortgages have roughly doubled over the past year because they're trying to get inflation under control. And one way to get inflation under control is to raise interest rates to where people won't be taking out loans. So that's the part that I don't exactly understand. But hopefully they go up and they don't come back down. Because when they stay up, your money makes money in the bank. Let's hear Biden administrator set rule is to take effect and force good credit home buyers to pay more for their mortgages to subsidize loans to higher risk borrowers. We already played this game. Which caused the 2007-2008 crash. Experts believe that borrowers with a credit score of about 680 would pay around $40 more per month on a $400,000 mortgage under the rules from the Federal Housing Finance Agency that will go into effect May 1st. The cost that will help subsidize people with lower credit because, they're irresponsible. They just need a handout. Ratings will also look for mortgages according to Washington Times report Tuesday. The changes do not make sense. Penalizing borrowers with larger down payments and credit scores will not go over well. Irene Wright, a senior loan officer at the Bay Equity Home Loans at the Times, it overcomplicates things for consumers in the process that can already feel overwhelmed with the amount of paperwork, jargon, etc. Confusing the borrower is never a good thing. The Federal Housing Finance Agency, which oversees federally backed home mortgages companies, Fannie Mae and Freddie Mac, has long sought to give consumers more affordable housing options. But those who work in the industry believe the new rules will only serve to frustrate and confuse people. So pretty much if you have money, you are a responsible person, pays off your credit card bill, pays off any debt that you have, then you'll be penalized when you get a home mortgage. It is penalizing being responsible. Confusing approach won't work, and more importantly, it couldn't come at a worse time for the industry struggling to get back on its feet these past 12 months. David Stephen, a former commissioner of the Federal Housing Administration during the Obama administration, wrote on social media posts proposing the new rule to do this at the onset of the spring market is almost offensive to the market, consumer, and lenders. The new rules comes as housing markets struggle in the wake of multiple interest rates increases by the Federal Reserve. Now keep in mind the housing market is still strong, but it's definitely been weakened over the past 12 months. Actually, the past 3 years, if you want to be realistic. This here, the rules comes in the housing market struggle in the wake of multiple interest rates increased by the Federal Reserve. Now, the thing is, when Reagan was increasing the rates, the great Ronald Reagan, he also had a Congress that was responsible. So, in lieu of raising the rates, they were trying to find ways to cut spending. Because the only way to reduce inflation is what we're seeing is the federal government pretty much needs to stop spending like a drunken sailor brothel, and the interest rates to go up so they work in unison, because it really doesn't matter if the government keeps on spending and passing new bills or new spending bills going way over the GDP debt. That interest rate could go up to 20 and we're still going to have an issue. The rules comes as the housing market struggles with multiple interest rates increased by the Federal Reserve. Under the new rules, consumers with lower credit ratings have less money for down payment and will qualify for better mortgage rates than would otherwise would have. The Federal Housing Finance Agency Director Sandra Thomas says the new rules are designed to increase pricing support for purchasing powers limited by income or by wealth. It comes with a minimum fee change. No, you're penalizing the rich. That's all this is you're penalizing responsible people. You're trying to penalize the rich because how dare they be rich? This is social. Well, this isn't really socialism. This is communism, which is a form of socialism. While Stephen agrees that there is a gap of an opportunity for low income, especially minority, borrowers to qualify for affordable homes, he's arguing an attempt to manipulate the prices is not the solution. I mean, there's Section 8 homes. There's ways to get affordable housing. The government can go in and buy a bunch of homes and say, hey, it's yours for $20,000 or whatever, $40,000 in this particular neighborhood, assuming that you meet the threshold. Why is this done? The answer is simple. They're trying to narrow the gap in access to credit, especially for minorities, all for minorities. Home buyers who often have lower down payments and lower credit scores. It's not just minorities, it's everybody. If you're irresponsible with money, you're going to have a low credit score. That's all there is to it. There's no ethnic skin tone about it because there's a lot of white people living in trailer parks because that's all they can afford because their credit is shot. The gap in home ownership is opportunity is real. America is facing several shortages of affordable homes for sales combined with excessive demand, causing an imbalance. But convoluting price and credit is not the way to solve the problem. The issue is that, especially in cities like Austin, New York, any of the bigger cities in California, Chicago, there's a limit to how many homes you could build in those cities. And yes, there's a demand for those homes, which causes the perceived wealth of those homes to go up, or the value in those homes to go up. One way to offset this is to build more homes. Now, I know that there's been a debate saying that there should be no more homes, but it should be apartment complexes. It has to be multi-dwelling homes. But the issue is most people, once they reach a certain age, or reach a certain maturity, they don't want to hear their neighbors argue, eat, make babies, or even hear their children. They want to live in a house, have some sense of privacy, some set of peace of mind that they don't have to hear their neighbors. That's about 3 to 6 inches away from them. 2008 recession happened because people who couldn't actually afford homes were being approved for them in large numbers. Sounds like history is repeating. Only this time it's intentional. Everybody, yeah, even Reagan. I don't know if it was Reagan. It may have been Reagan, or it could have been someone before him. Instituted everyone deserves a home, which they're making it easier and easier. And each president chipped away at the hardness to get a home. Then eventually, under Bush Jr., it fell apart. Easy fix is don't use an FHA for your loan and have at least 20% down so you don't have to pay the PMA. Take a conventional loan from credit union or a small regional bank, or start out small and pay cash. Everyone wants that forever home to start out with. It's unrealistic. You need to start with a small and build up to the bigger home as your income grows. But not this current generation. They want everything handed to them. The New York Times wrote a rare, honest article in the mid-90s criticizing Bill Clinton's plan to give mortgages to deadbeats. 10 years later, the market collapsed. If you have bad credit, you might qualify for a higher interest rate loan, but that loan is solely responsible to the home buyer, not everyone else. If you have really bad credit, you don't get the loan at all. It's really very simple. 2008 was the result of Bernie Frank and his legislation supported by Clinton, and the banks had to provide loans to people who did not previously qualify for a loan, with the provision that the banks had to open up branches in poor neighborhoods. Here we go again. You see, since the bank is federally backed, and they want to be federally backed, federal government comes in and say, hey, you want to open up a bank? Put it in this neighborhood. This neighborhood could be a poor neighborhood. It could be a crime-ridden neighborhood. And they had no choice. If they want to open up a new branch and be federally backed, they had to play ball. Let's see here. I worked 3 jobs to pay off my property in less than 4 years. I had no idea what my credit score is because I do not buy anything on credit. I have no credit cards. I have no mortgages. Although I might want to take out a loan to pay my utility bill. It's gone up 60% last year. My grandparents taught us if you can't pay in cash, not pay in cash, but pay in cash for what you want, you don't need it. Solid advice. Isn't this what caused the financial crisis in 2007, reducing the requirements for high-risk buyers? No, it's actually one step more. not only reducing the requirements for high risk home buyers, people with good credit, people that are responsible, have to pay a higher fee. Another broken campaign promise as Biden seeks to hide a tax for those making less than $400,000 per year. A government redistribution change on well-qualified borrowers to manage the risk of poorly qualified borrowers to provide relief to the poorly qualified as a tax. Joe Biden once again lied to the American public, and by the way, I care more about this than who Trump slept with and how much he paid for them for their discretion regarding their indiscretion. I mean, this is huge. This is terrible. And I don't know if there's anything we could do to stop this. I don't know if anything we could do. I mean, we could talk to our representatives. We could talk to our governor. We could talk to our state reps. We could talk to our House of Representatives and the federal. We could talk to our federal senators to see if they could knock some sense into Biden. But I think this is pretty much a done deal. He has the authority to do this unless there's a lawsuit coming that prohibits him from doing this. I think this is in the purview of the administration. The administration is doing everything that they can to hurt this economy for reasons unknown to me. I got some theories, but my goodness, I don't know what to think about this other than hopefully you could put down 60% to 80% down on that home that you want to buy after May 1st. Because if not, you're going to have to pay a 1% fee. That being said, that is my video for today. Leave a comment down below on how badly this is going to leave the economy. But most importantly, have yourself a wonderful day, morning, or evening.